Well, good morning and welcome to Indian Open right here on Bloomberg Quint Live. It's an exciting day of trade simply because there is a bit of a turnaround in fortunes for the near term, if you will. The US markets ended reasonably okay, didn't crack too much, and the Nasdaq, the big tech essentially, helped the US markets did do really well, and therefore those stocks were the first ones which came to the rescue. Now, Asia is a bit of a mixed bag, you would have to say. Hang Seng is okay. Nikkei is not. Australia is okay. So it's a mixed picture, and the SGX Nifty is showing some upticks as well. Now the question is, because of that big downtick that we saw in trade yesterday, and those charts will come up on your screen, the kind of fall that we had in the Nifty Bank in particular, it's just too vicious for it to be wished away in a day's move. But yes, we might have some corrective moves in the session today. The question is, can those last? I doubt that the SGX Nifty will really give us a true picture of what will happen during the course of the day. Just that might start off well. Lots of news flows. I mean, telecom is in focus, Reliance is in focus, banks are in focus. I heard just about 15 minutes ago that Bank of America Merrill Lynch, the report, they've come out with a report, they've downgraded almost all banks. And I think the report is saying that HDFC Bank is the only buy, according to them, and maybe a couple of other defensives. So it's an interesting day of trade. We'll talk about all of that with our experts. Let's get in. Mayuresh Joshi, at some point of time, we'll try and get in Jeffrey Dennis as well to speak about maybe the global picture too, because it promises to be an interesting one with Morgan Stanley and Goldman Sachs saying that the world economy is bottoming out. But let's start the conversation with Mayuresh Joshi of William O'Neill India, joins us right now on the show. Mayuresh, as always, good having you. Thanks for joining in. What did you make of that crash yesterday, Mayuresh? Was it a bit of a reset move which will take the markets lower, or was it all pain taken away in one move and now individual bets would start functioning?
Morning, Neeraj. So the way I look at markets is in three phases, very broadly. I think the first phase is the capitulation phase, the phase of shock that you probably saw by the end of February, and that played out till the end of March. I think this phase that is currently on is the phase of adjustment. So you're absolutely right. I think the markets are reacting to a whole host of factors. What is getting thrown out on the global scale, both in terms of macro data points, the expectations of IMF downgrading the global GDP, individual countries' GDP as well for the better part of this year, and expecting a V-shaped recovery in FY22. The third element obviously is this adjustment phase might last for a few months. So I think the kind of volatility that you'll see in the markets in terms of news flows that come through, the anticipation in terms of what can actually go wrong in terms of annualized earnings. So I think a lot of analysts on the streets have pegged a higher single-digit degrowth from an earnings perspective. So I think this is an adjustment phase that we're frankly going through over the next few months, which will entail a lot of volatility, and it's a broad range that the markets might probably looking at in terms of trading. The third phase, Neeraj, in my opinion, will happen after a quarter or two, when the reality will actually strike. What numbers the analysts had pegged at the beginning of the financial year and what has come through in the first half. I think that reality check is something that the markets will then see before making their next move. So I think the reality check is just indicating a downward bias or further earnings cuts. The markets might react accordingly at that point of time. So clearly, I think this phase, Neeraj, as you're rightly pointing out, I think more bias towards global flows, news flows, and again, I think the earnings outlook itself that companies and managements are throwing out. So broad-based range for the markets, maybe 8,800, 8,900 on the downside, 9,600 on the top end of the range.
Okay, Mayuresh, obviously financials come to the fore in terms of conversation, isn't it? Now today, the Bank of America note seems to suggest that their universe of buying into financials has gotten even narrower. And I think a lot of people are saying that they may not be the leaders of the next bull run whenever it happens. In fact, they might be laggards. If you are betting on financials, if at all, are you being very choosy? And if so, is it still a wide bucket of 4 or 5 names, or is it only 1 or 2 names?
No, Neeraj, I think it has definitely narrowed down. And again, the higher multiples that the street was assigning to these financials, I think the high-flying financials, the private sectors, banks, for example, or highly rated NBFCs. I think with growth coming off and the expectations of asset quality pressures coming off and the uncertainty in terms of revival, I think everybody's pegging in a second half revival to come through very, very sharply. And history has suggested, I think, if you look at the previous crisis periods as well, what you've probably seen is that financials, whether they are the top-ranked private banks or the top-notched NBFCs, they take a beating when these stocks probably start plummeting or the markets start plummeting. They take their own time to probably find a base for themselves over a quarter or two. But as I said, I think as the reality phase will strike over the next couple of quarters, and as we adjust to the real earnings in terms of the forward forecast that we had made at the beginning of the year, you're probably going to see some element of buying emerge at that point of time, some element of value emerge at that point of time, but very difficult to preempt at this point of time, and therefore the kind of reaction that you're seeing on these highly beta correlated stocks. Coming to your point, I think the past crisis periods have always shown that these stocks always bounce back with the ferocious velocity when the markets start coming back. So I think a few names should get shortlisted, but you should still take your time, is what I've always maintained. At William O'Neill, we've always maintained the leadership versus the Lagarde argument. I think clearly, till this pandemic is over, till the entire argument in terms of whether a vaccine will be found or not, I think healthcare to a certain extent will still remain on the focus. Yes, it's a biased sector at this point of time, highly consensus sector in terms of buying opportunities. But healthcare and selectively specialty chemicals, which you so perennially discuss, I think these sectors can do very, very well over the next few quarters from an earnings perspective.
Yeah, I think, well, some of these specialty chemical companies have come off a little bit and then found resilience at lower levels as well. I mean, alkylamines dipped all the way to 1650 or thereabouts, bounced back. Deepak Nitrite came off, bounced back. Similarly for Vinati Organics, bounced back. So it's an interesting mix of stocks. Just one follow-up question, Mayuresh, before we get to the stocks in news today, and that's on aviation. Now, did Warren Buffett manage to convince you that if you have Interglobe of Spicejet in your portfolio, you should get out of them? What do you think is the near-term in store?
So yeah, I think he makes a very strong case, right? But again, I think let's understand, Neeraj, that the complexities that aviation companies are working out of. Clearly, I think there is going to be very, very tepid top-line growth, even if these companies start on the 17th or the 20th of May on selective domestic routes or even international routes at some given point of time. So I think it's a given that Q1 is going to be a significant hit in terms of the earnings profile. Now, the demand recovery, as we've all been talking about, I think how is that demand recovery expected to come through? What kind of rules are going to be made? Is aviation going to change forever, or the way that we fly? I've been hearing a lot of global CEOs that they are going to probably cut down on global travel, so on and so forth, both in terms of their meetings offshore and on-site as well. People are going to be skeptical, Neeraj, at least for the first half, in terms of flying, in terms of vacationing, and so on and so forth. Add to that, I think the element of costs still remain extremely elevated. So the operating leases that we've got, the rupee depreciation that we've seen, I think those liabilities are going to hit their balance sheets irrespective whether they earn revenues or not, and the competition intensity is also going to keep yields at lower levels and not let it expand. So I think all these factors, along with all the other charges that we are seeing, even in lockdown, I think the parking charges have still to be paid to the airport authorities. So I think they are going to take a hit from an earnings perspective, and demand is going to be very, very slow and tepid. The only thing that works in their favor is ATF has come off significantly, but I think that is not the only factor that will probably drive earnings and the growth that we probably want to see. So yeah, I think buying into the argument that Warren Buffett is probably making at this point of time.
Thanks, Nikki, for that exhaustive list. Let me choose the one or two that matter the most. Mayuresh, the liquor companies went up on a storm in trade yesterday, but state after state, Rajasthan has hiked taxes, Delhi has hiked taxes, Andhra Pradesh has already done that. In fact, I think Rajasthan, if I'm not wrong, also gave out a decision to close the stores in Jaipur because social distancing norms were flouted. And frankly, in Mumbai, the couple of pockets in the videos that I saw, there's no social distancing, so maybe that could too come under pressure. Any thoughts here on the liquor companies, Mayuresh?
Yeah, Neeraj, I think it was scary to look at those videos. But yeah, I think what you've probably seen in terms of expectations of operations resuming for liquor companies, specifically at the retail end, and the expectations of volume growth expected to pick up quite significantly. I think the crowd itself tell you the story. But I think what has happened in terms of flouting of social distancing norms, and if retail stores are taken action upon, we're probably expected to see some amount of harsh actions actually emanating, and that probably creating a dent in terms of volume growth as well. So I think it's more momentum at this point of time, because what you're probably seeing, and you rightly put it, I think the hikes will ensure that the hikes in terms of whether the hardcore liquor sales or whether it's beer, for example, I think they start going up significantly. It will not create a dent initially because a lot of people will queue up and buy. But I think going forward, I think how these volume growths will grow or will they normalize at some point of time is interesting. The second element obviously is also the input costs have gone up significantly. So I think ENA and glass prices have moved significantly higher. But yes, certain companies are inching towards the premiumization angle, which is playing very, very well for them in terms of both volume and value growth. So yeah, I think it's more momentum trade at this point of time for liquor companies. Neeraj, a structural fundamental story I think still will take.
Okay, now BHEL is an interesting one, simply because of the move that they did. They issued a press release yesterday inviting global OEMs to leverage its facilities and capabilities to make in India. Now, Morgan Stanley has come out with a note, a tactical sell. I think they are saying that while this could help diversify the business prospects in the medium term, the core power business continues to face multiple headwinds. And therefore, they believe that there is a higher probability, 80% probability of the stock actually correcting over the course of the next 60 days. So be mindful of that. Credit Suisse, though, maintains the neutral and a target of 25. So interesting one. Mayuresh, you want to comment on this one? A lot of people will get influenced on BHEL, maybe for the right reasons. I'm just trying to figure out. Rajat Bose is bullish on the charts, on the positivity. He's spoken to fund managers as well. What is your thought? Are you tactically positive here, or would you believe that it's a stock that you wouldn't want to venture out?
No, sir, there are pluses and minuses, right? So I think the minuses are still outweighing the fundamental performance. So if you probably look at our methodology, what Cancelim is still suggesting, I think the EPS rating remains extremely poor, because you're absolutely right. I think the core power business itself looks very, very shaky at this point of time. You look at the non-moving orders, I think those are quite significant at this point of time. The execution of BHEL has remained extremely poor over the last few quarters, and that has got reflected in poor earnings and the poor EPS rating that I was mentioning. I think the pluses that are now emerging, and you're right, I think what they have invited multinationals to probably set a base is the land monetization that they are not looking at. Yes, I think that can probably be offsetting in terms of what can go right for BHEL over the next few quarters. But I think it's a long period. I think these projects are long gestation projects from a capex perspective as well. So I think there might be some sentimental momentum moves that the stock can exhibit. But as I said, I think fundamentally on our Cancelim parameters, whether it's EPS rating, whether it's the ROEs, the ROCs that it generates, it still remains extremely poor. So yeah, trading bet possible, not fundamental bet. Okay.
So that's the view on BHEL. Do watch out for this one. Maybe it's a trading bet and maybe not too much. Now, the other thing is there is a brokerage note on Godrej Properties. CLSA has maintained a buy on Godrej Properties with a target of 870. They believe it's the best place to capitalize on industry consolidation. Now, Mayuresh, comment on this one. I mean, yes, there could be near-term weakness in real estate, but it was the sector of the year for 2019, bouncing back after multiple years of downgrades. And why shouldn't one look at the largest players? So Godrej and Oberoi, why shouldn't one look at them in these times of weakness?
No, so you're right in the sense that how they are stacked up compared to its peers. I think they look better off from most parameters that you probably look at from the space itself. So yeah, consolidation would be a given going forward. I think there are again conflicting views and reports that I've probably been reading through in terms of ownership of new properties coming through, or whether I think it's going to be more of a rented kind of a scenario for new millennials going forward. So I think let's put that argument to rest at this point of time, focus on the core fundamentals. Yes, it's taken a beating as well. But the asset-light model that Godrej works out of Oberoi that you probably mentioned. I think what it operates out of, specifically out of Mumbai, the land bank that it already operates and owns. I think they are probably in a much stronger position from a balance sheet and a leverage perspective as well. I think it's the demand perspective that one needs to look at. And as sales velocity will come through with new launches over the next few quarters, these two players are definitely better placed. At this point of time, along with the sector itself, I think these stocks have taken a huge beating. So I think the performance, both from an earnings perspective, because of the slowdown that we'll witness for the industry as a whole, and expectations of sales velocity picking up over the next few quarters as demand comes back. I think those are the two factors where the earnings ratings will hinge upon for these counters. So yeah, I think definitely keep them on my radar, Godrej Properties, being low debt equity, having an asset light model, and again, I think strong management and corporate governance of the group as well.
Okay, fair point. So a bit of a techno funda view out there. Technicals look okay, but he's staying away from those names. Now, the other interesting move that we could see in today's session is, well, I'm surprised. Raut Beverages looking like starting off really low. I don't know if there'll be a 14-15% gash, but certainly looks like it. Okay, maybe these rates would settle down a bit. Mayuresh, big crack yesterday. We see awaiting numbers today, but it's apparently showing some sharp downticks in the pre-open session as well. What are your thoughts on Raut Beverages?
I think you shouldn't be playing on numbers, right, Neeraj? And I think the 9-month performance for Raut Beverages has been stellar. So if you look at the India growth, if you look at the growth in the overseas market that it caters to, I think the volume growth has been quite substantial. Again, I think if you look at the pie itself, I think water, juices, and I think the soft drinks portfolio itself, I think all these three portfolios have shown a decent amount of performance. The third element in terms of the capital raise that done a couple of quarters back to repay debt, the net debt to equity also probably remains at far more sanguine levels at this point of time. The fourth element obviously is how they're ramping up the Tropicana juices portfolio and their plant at Pathankot specifically, because the fixed cost absorption and how they're capitalizing depreciation thereof did take a toll, but I think the EBITDA margin still managed to hold on in a 9-month performance. But I think what kind of numbers come out for this quarter and what is the management commentary going forward from a value and a volume growth perspective will be very, very interesting. So I'll watch out for numbers, specifically looking at the start that the stock is giving at this point.
Okay, do watch out. Now, Mayuresh, just a follow-up question. Fundamentally, would you be a buyer in either Bharati Airtel or Reliance Industries?
So it's very interesting, Neeraj, on how these two players are stacked up. Now with Silver Lake coming through on Jio platforms and the enterprise value in excess of 5 lakh crores, I think that's a huge, huge positive. What you've already seen in terms of a couple of deals going through, the rights issue where they're going to raise almost 57 odd thousand crores. And the expectations in terms of their fiber assets, if the InvIT sale probably goes through, the deal that they're working on with Brookfield for 25,000 odd crores, and any more investor coming into their fiber business, you're actually looking at debt deleveraging happening in a very, very fast manner over the next couple of quarters. Add to that, I think anything happening positively on this Saudi Aramco deal, they're probably saying, and the expected EBITDA that they'll post on a consolidated basis, anywhere between 75, 80 odd thousand as a base case scenario, I think you're probably looking at a far healthier balance sheet going forward. For Jio specifically, I think if I was stacking up all the three players, Vodafone, Bharti, and Jio at this point of time, look at the subscriber base that Vodafone has got at 332 odd million odd, and the kind of liabilities that they need to pay off, the capex, the AGR dues, the spectrum liabilities, and the EBITDA that they're probably doing at this point of time. So I think the ARPU increase is a given if they want to survive in the business in the first place. Now, assuming that they are reporting ARPUs of 125, 130 odd rupees, and that ARPU goes up to 175, it creates a level playing field for Bharti and Jio as well. So as ARPUs keep on going up, and in the case of Bharti and Jio as well, if you assume these ARPUs at 175, 180 for the better part as an exit rate for FY21, and the subscriber base of around 300 million for Bharti, almost 475 odd million or 450 odd million for Reliance Jio at the end of FY22, you're looking at a substantial increase in terms of EBITDA, both for Bharti and Jio. Secondly, I think in terms of the platforms itself, the enterprise business for both Bharti and Jio has been doing exceedingly good because they have not entered into price cuts at that periodicity and that line of business itself. And the third, again, I think is the leverage component for Bharati, for example, I think, yes, the leverage is still higher, but with cash flows improving, with ARPU increases, and African business is expected to hold on, even if I think the crude prices have come off for countries like Nigeria, Congo, which depend on oil. I think they would still grow at a reasonable clip, which means that the cash flows will entail debt EBITDA coming off, and capex has come off significantly, and no bidding for 5G. Some of parts valuation, Bharti Infratel might actually come off because of tendencies coming off with Vodafone Idea. But I think that is probably gestated, as is the fact that is gestated that low-paying subscribers have got freebies of 80 million odd subscribers for this quarter. But that gets offsetted with higher data consumption for the bundled packs that they entered into. So I think I remain positive on both these leaders in the telecom space.
Mayuresh Joshi, can I ask you for one recommendation? It could well be from a space that you very closely track, which is specialty chemicals, or something else, but one stock that you believe people can, in a staggered fashion, allocate money.
So yeah, I think pharmaceuticals and specialty chemicals are just still somewhere where the earnings bias continues on a positive scale as we were cancelling. So I think Cipla is something that I'll still remain extremely positive about. Yes, they've got approvals which has got gestated and factored in by the markets. There is an earnings upgrades of 5 to 6%. But I think there is a couple of key specialty drugs that are still in the pipeline that can actually still work magic out for Cipla from an earnings perspective. So I think the Adware portfolio itself, any positive development on that front over the next couple of quarters is going to be extremely positive for the stock. The second element is their institutional portfolio as well. Tramadol, for example, I think if that gets released in a very sustained fashion in global developed markets, I think that will have a significant say in terms of creating that exclusivity pipeline and pipeline that they're probably working out of. And the third is any positive reaction in terms of their Goa plant over the next few quarters. So I think any positive move on that one will have fresh cases being filed for ANDAs and specialty ones as well, which will ensure that the margin profile remains protected. Yes, the valuations have moved a tad bit higher, but I think this stock probably within the entire Nifty basket and the pharma basket looks best placed from an earnings perspective over the next few quarters.
Okay, Mayuresh, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.